Good morning, Quasar Markets Live, TGIF. It's PCE Day. I got all kinds of acronyms. BigBeat, how are you doing today, my friend?
My acronym today is WIN. The Cardinals won yesterday, so I'm happy.
In Fox, baby, we're both in first place.
Yeah, look at that.
Live it up while we can.
Look, it's very simple, Howard. This morning I wake up and I see Bitcoin down over 2.5%. PCE coming in pretty much we call it in line in Wall Street, right? Where the numbers are exactly what they think. It's called in line. And when I look at it from that perspective, nothing has really changed. We talked about this, right? Basketball and baseball and sports around the world and things people just aren't, we talked about this earlier, before the show that, look, politics has really started to ruin not just friendships and families, even worse now, but that it's also affecting now other countries. I saw the new numbers out of USA Today, New York Times this morning about how many Republicans and Democrats now are hating the fact that we're no longer friends with Canada. We're no longer friends with Europe. And the stocks in Europe are up. Right, this is becoming an issue now. Is this what we voted for? I'm not sure. We'll see if it works. I think a lot of Republicans are now saying, "Well, this is what Trump's bluster is, and he's trying to fix the problem and then back off." I don't think so. This is, April 2nd's coming pretty quick now, and he's saying they're going to be permanent. That's gonna change forever. Then, okay, at least for the next 4 years, if he doesn't change his mind quickly, and because of that, people are on edge. The market's on edge. And this is why you're seeing gold at all-time highs. That's why you're seeing, people moving to things that protect your portfolio, like VIX. So, no, I think there's a lot of malaise and a lot of unhappiness. And I think you said trade tensions. That's right. Yeah, the tensions are out there. So that makes people nervous. I'm not nervous. I'm not scared. Look, when you learn about the markets and you study the markets, and I said this yesterday on Wolf Spaces, I'm not pearl clutching my charts. I'm not going, ooh, look at my charts because my charts tell me everything I need to know. If you're doing that, you're not doing it well, right? The markets are about everything. And what do I always say, Howard? The markets are about one thing and one thing only, right? The path of least resistance. And when people are nervous, the path of least resistance is to the downside. When they're not nervous, as Michael Saylor says, Bitcoin's going to come back when risk on again, and it'll go through and it'll make all-time new highs, right? So we just have to get through this little area, and it's not just the markets. I think it's everywhere, right? You're seeing people layoffs are picking up in these companies, and you're seeing, and I said this yesterday, the one thing that I caught from almost all of these earnings seasons was one thing. They all, 87% beat on earnings, right? They beat, but they had bad guidance. No one was going, oh my God, the picture of the future is rosy. No one said that. I went through all of them. I AI'd all of them. I said, is anybody bullish on the future? And nobody was. Then that becomes infectious, right? Then I talk about how bad the world is. You talk about how bad the world is. The next person talking about how bad the world is. And all of a sudden, everybody's
echo chamber. Yeah,
right.
The echo chamber takes over. Yeah. Mark the Shark, I'm glad you locked in here this morning. Good to see you like always. Yeah, my things are that all that guidance, though, read it, because the guidance is all tariff-based. So in other words, FedEx isn't a worse company today than it was yesterday. NVIDIA is definitely not a worse company today than it was yesterday. Rolls-Royce and Ferrari aren't worse companies than they were yesterday. Why are they moving down? Because of these threat of tariffs, geopolitical tensions. So yes, it's going to be a rocky road. You got to keep your head on a swivel. You got to have stop losses, but you should also have wish lists, right? I talked to you about that before we came on today. Like you said, I'm not pearl clutching my charts, but what I am doing is I'm looking at them for historical areas that I might want to acquire a stock.
And that's how you should be doing it, Howard.
Yeah, you talk about it with Disney all the time. You have it. I love it because it's just the easiest number to use. It's 100. You know what I mean? And it might be a little lower now in a bearish market, but you have a general rule. You like to buy Disney at 100, so you start to look at those things. You start to put on wish lists. And I said it's always been the way we've done it in Bitcoin, right? At a time like right now, I'll put it in order at 75 so that if there's bad news and if China bans Bitcoin for the 876th time, and it drops,
Yeah.
I'm there to win. So, this market, you can make some good money in it. There is a lot of, and I did point out too that charts, VWAP on the minute chart still matters if you're a scalper. So when we're telling you that, don't run away from charts.
No, hell no.
Use them correctly.
I probably love charts more than the people that are charting.
We're just advising you to use them correctly. That, what was working 2 months ago in a sideways or upward bullish market is not the same indicators you're looking at when everyone's scared and capitulation is more likely than a buy cycle.
And I always say the same thing, Howard. If your charts look the same as it did 3 months ago, you're not doing it right. And what do I mean by that? There are little more than 8,000 indicators. And
I'm going to pull that up, Steve, my trading view, just so we can show you again a big partner.
I'll tell you, Howard, that there's no one that loves charts probably more than me. I love charting. I mean, I was given graph paper and pen in 1989 and said, "Good luck, kid. Go get it done. Right? Go chart." And I would do the highs and the lows, and I did Japanese candlesticks, and I even went to school for Japanese candlesticks. Right? I love charting, and I can tell you more about Japanese candlesticks. And if you have not done it, if you are using Japanese candlesticks like he is here, I would highly suggest you read books on Japanese candlesticks and how it started.
What do they mean? What are these wicks telling you?
Reason why they're called Japanese candlesticks. How about a little history today? I'll give a little history. Do you know why they were invented? They were invented to follow the rice market in Japan, because the guy that invented it said, "Look, there are patterns here." Right. And they didn't have graph paper and pen back then. Right. They charted by putting numbers and the Japanese symbols. And that's why you have the names of the Japanese candlesticks. Right. And for me, the way that Howard has them here is how I usually use them. Now, these aren't the original Japanese candlesticks. OK. They are different than they were at the beginning, because yes, right. You're using hollow. You can use hollow candles or volume candles. There's all kinds of candles. This is the original way that Japanese candlesticks were done. The problem with me was I want to know volume on top of it, right? So I want to see those candles filled out, and I want to understand in a more visual aspect of them too. And there are different types of Japanese candlesticks, or they're actually Russian candlesticks too, by the way. There's a ton of ways of doing this, and for me, I look at that. Now, when you overlay the technical indicators onto the system, you need to understand the world around you. You can't just say, "Ooh, I love linear regression." I love linear regression because it helps me understand. And let me tell you why. Linear regression is easy to see the market for retail. Linear regression is easier because they overlay it and show you channels. It's not how Wall Street does it. Okay? Wall Street uses a 3-hour chart and 3-minute candles. Most people don't know that. And I'm telling you, I'll tell you little secrets about Wall Street. I worked there. I will tell you that the 3-hour chart on top of the 3-minute chart is where things are usually pinpoint. Now, if you're trading you're trading scalping and you're hitting it like the one tick, and you want tick by tick by tick, you're going to have a heart attack in about 5 years, right? I don't want people trading like that. That's not normal trading. Let the HFTs, high frequency traders, do that. We're not here to explain that and teach that. I mean, I know the HFT boys in Wall Street. They're a different breed of people. I like them. I like them though. They're good, fun to hang out with, by the way. But I will say this much. There are different technical indicators for different types of periods of time and how we actually look at it. So this is what I mean by the whole world matters. And you need to understand politics, you need to understand tariffs, you need to understand what's going on to know what to put on your chart. If the market is low volume like as it is right now, I'm not putting on Elder's Force, right? Elder's Force will show you volume over price, right? And you overlay that, right? Am I using EMAs and SMAs? And yes, I am, because that gives people an understanding. But we're below the 200-day moving average. Oh my God, the world is over. Guess what happens usually when 200-day moving average stocks go underneath it? They usually go right back up above it, right? But we don't feel so good. Okay, how do I use it? I'll tell you, there's a lot of ratios that I would like to use. I use PE ratio over charts too. I use fundamentals over charts. When stocks get too cheap and I'm looking at buying stocks, at a good example of that would be Nike. NKE, I do that all the time. I will tell you right now, before he does, pull Nike up. And let's do Quasar Markets teaching right now before the market opens. I want you to add a technical indicator. Now, just if you can, Howard, pull up one chart. Get rid of the other charts. Just pull up one big chart. And I want you to pull up a day chart, which I think you have here. And I want you to pull up Donchian channel. All right. So these are the indicators. Donchian channel. Just to DO. There you go. There you go. Donchian channels. Most people don't even know what Donchian channels are. You want linear regression on steroids? This is giving you your numbers. This is a much better understanding of where the market is. You didn't even know about Donchian channels, I bet you. And what this one does, it tells you a little bit about where the actual buyers are and the actual sellers are. Exactly. And you did it right. Take the linear regression off, and now you now know Nike is way out of bounds where it should be. You're seeing where the buyers are. You're seeing where the sellers are now, right? So let's add onto this, because we know that there has been some volume in Nike. Now go add Elder's Force to it. And now you see, I'm not just putting one chart out in front of you. I'm laying several layers of the chart on top of you, all right? Now you're seeing that this thing is oversold, right? Because now you're in oversold territory. If you overlay the crosshairs, you got it. He's showing you where the buyers are and where the sellers are. That's not linear regression. That's not EMA and 400-day EMA and over the death crosses and golden crosses. That's showing you right where they are without even overlaying the volume. And you're able to see it, and you can see where the volume picked up. See where the downside picked up there on the, exactly. You knew it, and you knew where to buy. That's what I'm saying. If your charts look the same, if you don't have any of these on here right now, it's because you don't know to change them. And then when I see people pearl clutching their charts, as I've been saying lately, they don't know what to pearl clutch, right? They don't know what to actually put on their system. And when I want to teach that, right? I want them to understand exactly how to use their charts. I want you to pull up something else. I want you to look at when I know that a lot of people don't do this, and I'm just gonna do it myself. I'm gonna pull up on my own screens here indicators here. I'm gonna go to my. If you'll give me 1 second, I need to pull up my chart so people understand. And actually, I have a Stream Deck in front of me with the button chart, so it's right in front of me. Right. I'm gonna do this right here for you. I think a lot of people want to understand. Present Bitcoin. Share my screen. Yes, you're absolutely right, Steve. It shows you where your support and your thesis is, right? This is not a normal charting system. People don't really understand. I am using my favorite, and I love him, by the way, John Bollinger Bands. Everybody thinks that they understand Bollinger Bands, but they really don't understand the underlying thesis behind Bollinger Bands, right? They don't understand exactly how it works. So you notice I'm pulling up a 1 minute chart here. I'm going to pull up a daily chart. This is a daily chart. I don't want to just where the tops and the lows are, right? Now, I'm showing Bollinger Bands because the Bollinger Bands are widening here, right? I want to know exactly, is this a buy or a sell? And you see when Bollinger Bands, when the actual price got outside of the Bollinger Bands, it became a little bit too overbought, right? And now you're looking at it here. We're not in the oversold territory. They widened out, the bands lowered down, so that gives the buyers and sellers a little bit more room. So now I want to know the Williams VIX fix. Probably don't even know what that is, right? That's telling me, are people nervous or are they scared? And yes, they were scared a few days ago, and we saw that, right? And when they got over scared, they were oversold. And that's what I said, it's time to buy. The capitulation has happened, and the big beat bottom is still in, right? And you're starting to see the VIX dropping a bit. Right? So people aren't as scared right now. They're not sure what to do. Volume is lowering. I think I can pull it up here. The volume is lowering. And you can start to see a little bit of my dot plot of what I'm trying to figure out as my histogram of RSI. Are we overbought or oversold? So you saw right here in the RSI that we were oversold. So it was a buy for me. That capitulation happened. Now, raise your hand of how many people have all of these on their charts. And this is how my chart is today. This wasn't the way that it was 2 months ago. I changed it because I thought that was important, right? So when I say people that says, okay, I'm doing this, and if you'll notice, what kind of candles I have. I'm even laying them out for you, okay? And most people don't even realize that my favorite type of charting isn't even candles or hollow candles, which I'm using right now. I'm using those because I think that's an easier one. I think it's Heikin-Ashi. I use Heikin-Ashi candles, right? Because I think that they're much better, a much clearer picture of where we are. And you can see right here that right now the selling is starting to pick up a little bit in Bitcoin. But that's Heikin-Ashi. And I'm not going to go into Heikin-Ashi right now for everybody, but that's what I also use Heikin-Ashi, right? So all of a sudden, I'm not just using, people say, I'm a big chartist. Probably 9 times out of 10, they don't know everything about charting. There are over 8,000 different indicators, and I use somewhere between 1,000 and 2,000 different types of indicators. I mean, there is all kinds of fun things you can put in here. But I'm going to tell you, when people ask me about my favorite indicators, well, this is how many favorite indicators I have, right? This is not just a few indicators. I have a lot of them, right? And if you notice here, look here. On stocks, I use Altman Z-score overlaid onto a chart. That tells me it gives me a better number, a better ratio to actually look at the stock. It's not just, oh, look, this is cheap. Because I hear that all the time. Oh, the price is low, it's cheap, right? Well, okay, great. But tell me why it's cheap, right? Is it cheap because of fundamentals? Is it cheap just because of the price target? No, I want to know everything around that stock, right? So let me, and you'll see here, look, I've even got debt to equity ratio. Are people actually, are they able to pay their bills as a company? Great. They can't, and the price is going lower. Well, it's going lower because they can't pay their bills, right? So there are other things on a charting that you should be adding to it. And I'm going to show you, and I'm going to pull it here too as well. I know people who use Elliott Wave, right? I think Elliott Wave is one of the greatest things out there. And if you ever get a chance to read the book on Elliott Wave, I think you should, the original book. Do that, because then you'll understand what's actually happening, right? It's not just, oh, look at the chart. Look where my little dot is where it's telling me where to buy and sell. That's great, but explain it to me. Explain to me your thesis of why your chart is better than mine, because I guarantee you it's probably not. I want to teach people how to chart like this. So now I have overlaid on my screen about 16 different technical indicators. Why these types and not the ones that I had 3 months ago? Because the market has changed. The volumes are picking up but to the downside. Why? And over time, maybe I can teach you how these charts, these technical indicators, are much better than what you've seen in the past. And I will tell you right now, it looks like we're in a bullish pattern. There's a C pattern on Elliott Wave, right? I think that this is why I like this. You can see it right there and right there. I think we're in the C phase, the fourth phase of Elliott Wave. So what is Elliott Wave? But I can explain to you, and I won't do it today. But I think right now the Bitcoin is a little harsh right now. There's not path of least resistance is pretty much to the downside, and you can see right where we are. This is where it probably is going to pull back to, and that's why you heard earlier this morning Howard talk about 75,000 is where I want to buy. Well, guess what? That's where pretty much now your charts are telling you something. Not only why is it 75,000? It's not because my charts tell me that. Your charts don't tell you anything. Your charts don't speak to you. Your charts don't say, hey, Steve, guess what? This is where you should be buying. They're telling you where the points are where other people feel more comfortable about buying, where they're selling. I want people to understand the market is just a mechanical thing. It's just a machine, right? It's like going to the car dealership and trying to buy a car. I'm not buying that car for $150,000. I will buy the car at $100,000. Great. Why? The dealer's going to be like, well, damn, it cost me $120,000 to buy it. I can't sell it to you at that price. I can't do it. But then if the world changes, you can't. So that's why I'm saying that, look, if your charts look the same, Howard, and I'll get off my soapbox, but look, this is exactly why we're here to teach you. We're not here to teach you some silly charting. We're here to teach you how those of us in Wall Street and bringing you people like the Steve Flanagans of the world to you to actually understand how things actually work and not what some YouTuber told you.
Absolutely. Can't argue with any of that. Thank you, Steve, for showing your charts and giving a little bit more info there. And again, it's how everybody, it's what works for you. Charting is very particular to each person. So, for me, I don't like a lot on one chart. I keep 3 charts up, 3 different time frames. All of them have different indicators on them. So I get my 16 indicators off of 3 charts that are on one screen because I like momentum and short term here in the VWAP. which is very similar to Don Chain I'm using right down here in the bottom.
Right now, I would say using anchored VWAP. I think Brian Shannon.
That's what I use. That's what this is. This is anchored VWAP. Yeah.
Especially when you have low volume and people are not sure. Anchored VWAP this is literally the time. And if you have a chance to go listen to Brian Shannon, I would tell you to go listen to Brian Shannon, because Brian Shannon understands anchored VWAP, and this is literally the time. What does it mean? Well, VWAP is the highs and the lows, right? Volume weighted assets price. Then what you're trying to figure out is where is the center, and if it's out of whack, that's what stocks are about, right? The path of least resistance. Because why are you buying and selling stock? Because you think the price is not the right price. You think it's either going to go higher, you think it's going to go lower. That's why we invest, right? So that's what I'm saying. If your charts look exactly the same, you're going to definitely not be happy.
And anchored VWAP, for those that don't know, is what like Warren Buffett uses when he's acquiring a company and says, I want to slowly keep on buying more of, MFG. And I want to do it. And every time it goes below the VWAP for the day, and say they want to buy 100 shares today, below VWAP, buy some more. Below VWAP, buy some more. Below VWAP, buy some more. It gives them the average price that the daily trader is looking to, it's average.
And do you think Michael Saylor is looking at his charts going, ooh? I think Michael Saylor is buying because he wants to buy, right?
Yep. Absolutely. Some people's philosophy, especially when it comes to Bitcoin, just buy the dip. So I will say tick still down negative here, 71, but it's been pretty muted today. I think we are going to see a low volatility day. We got the tournament. We got some more baseball going on. I think people are waiting for the second. I really do.
I think people are also waiting because of tax season too, right? I mean, look, I think that there is some tax selling going on that people are nervous about, and they want to raise some cash and maybe not want to have, as Michael said earlier, don't want to have risk on right now. I also did, if you have a chance to look at some of our Quasar Markets Twitter feed, you can go back into the highlights and you can look at, I actually posted one in regards to a data of the good months to buy and the bad months to buy as well too. So I kind of went through all of those as well, and kind of showing people where we were, where the median is, and going through that. So for me, look, we're giving you all kinds of data, and I absolutely think that some of the data that I'm actually putting out there, it's professional as can be, right? I'm using that professional Wall Street version and giving it to you. So I want people to understand that, we are literally laying out some theses here for people. And right now, my thesis is that people are nervous, people are worried, and I wouldn't be, right? As I told my own parents, go get your golf cart and go ride around, right? Relax. It's okay. The world's not melting just yet. It doesn't feel good right now. I get it. It does not feel good. And I think that the president's got some explaining to do. And I will say that the communications out of the White House is it's in shambles. We don't really understand what he's doing on it. And if there's anything that Wall Street does not like, it's not knowing, right? They like a path. They want to know exactly what's happening. They don't like the jarring side of things, and they'll take their ball and go home and not play. I don't think that's the case. I think the president does not have a plan. I'm going to be real honest about that. He does not have a plan, and he knows that. He's
so you had Michael Litt on. We're going to put the video on later on today. Yeah. So is that he sort of laid out. Oops, I'm sorry.
He's saying that Scott Bessent and Howard Lutnick have a plan. That I agree with, and he's trying to play within those that I'm going to say court, right? And so when I hear from Republicans saying, "Hey, it's bluster," or I hear from Democrats saying it's neither one. Just stop. It's somewhere in the middle, right? As we always say, and someone tells a lie, it's not this, not a lie. It's somewhere in the middle. And I think that's what we're happening. I think it's something in the middle, right? I don't think tariffs are going to be for everything. I don't think the world's falling apart for everyone. It's somewhere in the middle. 99% of us are right in the middle. The fringes have taken over both sides, and that's what I don't like. And what we're seeing, Howard, I think you should do this, and I think you made a great point before the show, is the gold to silver ratio. I think this kind of gives everybody a much clearer picture of what's really going on. I think that to me is very important. And why is it important? Well, gold is mostly for older people who can afford $3,000 an ounce. And silver is for people that can't afford the $3,000 an ounce and buy smaller amounts of it. I think we're about to be open here in 5 minutes. I think you're seeing a little bit of selling here.
Here's your gold silver ratio, Steve.
Right. And you'll see that we're actually widening a bit. So this right here is telling me where we are, right? If you want to watch your charts, I like the gold to ratio chart. If you have access to it, I think you should have it around you, because gold to silver ratio.
Oh, that's what I have up. Yep.
Yeah, no, I know that. Yeah. And if you can, because there is high volume in it, right? I would tell you to put Anchor VWAP onto it. I would tell you to put on Elder's Force on this, right? And that way you get a much clearer picture of, is gold going higher or is silver going higher? And I think the answer is gold is probably going to go higher. Looks like it's true, right? So now he's added it on there. And there's your, look at that answer. Look at that answer there at the bottom. I mean, it's telling you, it's totally telling you that gold's probably going to go a little higher, right? And silver may or may not be able to hold up to it. And silver's dropping now, but dropping faster than gold, right? Because people who buy gold probably, and that's another thing, right? They're buying gold. They're not selling their gold, but people that are buying silver are pretty much running their silver through ETFs. They're not really they're not picking their silver up and their gold and their silver coins and then going to the store every single day to sell it and buy it, right? So that's what I'm saying. I think you're seeing these bigger countries, institutions that are holding gold. And here's another thing. If you want to know the price of gold, you want to know whether it's going higher or not, just go watch CNBC or Bloomberg or Fidelity or Schwab. Are you seeing any gold commercials? Nope, you are not. Why? Because those gold companies don't want to sell you their gold because they want their gold prices to go higher. When you start to see those commercials, and that's on chart, that's not charting as always, right? There you go. Money Mitch is saying, hey, did you see the move in used car plays? Absolutely. And I'll tell you what, he's absolutely right. Auto part names. The people, you know what? That's how you know the world's not doing so well, is when people are fixing up their old cars, right? Or when Costco prices are going up because, everybody's going to Costco to save money, or they're going to Dollar Tree and Dollar General, all of those things. That's not from charting. That's just common. My dad always says, if you have common sense, the market's easy. Right? If you don't have common sense, the market's tough, right? Because you're trying to outsmart people on Wall Street. When I was growing up, my parents were very scared of me going to Wall Street. They were like, he doesn't have an Ivy League education. I do now, thankfully. But when you look at it, it's like there's a lot of smart people out there and smart charting, right? So I want to bring that to people. Look at that, AutoZone's popping. Well done, Mitch. I love it, man. And big shout out to you too, man. Love you guys. But
and I would say, and what you're going to see here is, of course, part of this is the same thing we saw with Ferrari, right? AutoZone, a lot of these companies have already moved up the prices of imported parts without there being an increase in the price of imported parts yet. So do keep in mind, for sort of nefarious reasons of corporations, some of these are moving up. I'd be a little wary as they get too high up there. So one that just to keep an eye on there.
Well, now I will also say that Warren Buffett has a huge cash pile.
He does.
And whenever he has a huge cash pile, he goes what he calls whale hunting. Now, I know he's not quite in charge anymore, and Alan Jane is now the big dog now. But I will say that he still has money to be able to invest, and he calls it whale hunting. And he's looking for companies that, like you should be, looking for companies that have high cash flow, low debt, continues to make him money even in the bad turn. So he doesn't have to go out and buy hundreds of thousands of ounces of gold to protect his portfolio and to buy the VIX. He doesn't do that. He gets cash no matter what. He gets his Dairy Queen money and his Coca-Cola money. That's what he's saying, is building wealth, right? I mean, it's like The Richest Man in Babylon, the book. You should read it if you haven't read it.
I have a question for you, because he's been putting a little bit into Japan, we've seen.
Yeah.
But he hasn't really been allocating much into anything. Is he waiting for better times, for worse times? Because he's saved the government twice, right?
He has. I mean, when things go bad, the government pick the phone up, calls Warren Buffett. And that's the Lehman Brothers issues. And if you haven't read the book about the whole Lehman Brothers, or watched the movie about Warren during the Lehman crash, even when if you don't know hand signals, that's Bear Stearns, right, on the floor. When they started to crash, and of course Jim Cramer said everything's fine at Bear Stearns, and things weren't fine at Bear Stearns. That Warren was the first person he called. And if you don't know,
we are about to open here. Just want to keep us on track here.
I think the
Here we
market's
go, down 131 here. A little bit of a muted start. Ooh, minus 500. So we are
I'm
seeing a
not
little
scared
bit
today. I'm really not scared today. I think markets are going to probably melt up all day today because, quite frankly, I think what you're seeing is the scared money right now is always the first money, and scared money does not make money. We know that, right? So I'm not too scared about this right now.
I'm going sideways, Steve. I said that yesterday. It pretty much played out. I think we're going to see a little bit of choppiness up and down. We'll have some expirations that will affect stuff.
Yeah,
not a huge expiry day, not a huge day there.
But I think the sellers will be covering their shorts today. Yeah.
Well, that's a curious one because I'll bring that up. Right now, the Qs are on track to close the weekend at the below last Friday's close. So in theory, the shorts don't have to cover, right? Market
no,
chart.
They don't have to cover.
Market chart. You think you're going to have to cover those, or you think you're in for the long haul here? Let's ask a trader. What do you got there? He's
all right, Market Shark. Talk to us. You're short today.
What do you got?
Yeah.
I sort of feel like him. I think that we're gonna melt a little bit down without much of a move, though. I think we're gonna close about the same level we closed last Friday. I think it's gonna be a whole bunch of nothing.
What's the SPY out right now? Pull the SPY up for us, and I'll take a long
565.13, 565.
Yeah, I think we melt up to the upside, but we melt up. We don't have a strong up day. I think that the selling was done overnight. Is picking up some of the as if you don't know, as worked in the White House, Friday at the end of the month. Okay, we call it taking out the trash. If you don't know what taking out the trash means, it means that a lot of the bad news that the White House does not want to talk about during the week because they don't want the news channels talking about it all week long, and they'll probably end up on the Sunday morning. Is that they put bad news out, and I think they put the bad news out yesterday and not today, right? Okay, we're hearing now
Money Mitch is with you. Money Mitch and you have the bullish side.
All right, we just had some
Market Shark and I have the downside. So
we got some news coming in now. SEC now says they're beginning to onboard Department of Government Efficiency officials now. So I think I like this. But
you and Money Mitch versus me and Market Shark today. We're ready for you.
I'm not scared.
I'm not scared either. I just, like I said, I just have it targeted. I think we finish right around 562.
Dollar is dropping right now. If the Dixie get below 104, we're going to go higher.
Before the day started, and I'm sticking with it. 564.20 is my end of day target for the SPY and for the Q.
Mitch, if you're out there, you want to come on the show, I'll have Howard send you the link to come on in, man.
I got us. I think 480 is right about where we finish on the Qs today, right around 480. That's the spot.
So yeah, I think higher. I think I'm not worried about this. What we're at.
Mag 7 so far is all in the red, but it looks like a few of them want to go positive here. That could get the markets moving. Money Mitch says we just got to get these bulls scared. I think that you could scare them. I don't think it would be hard to do.
I mean, well, bulls don't get scared, right? Bulls. Look, it's very simple.
What's he saying? I think he's saying it to round him up. I believe, because remember, he's bullish. So I think he's saying the bulls just got to get a little scared and say, that's it, guys.
Bulls make money, bears make money, pigs get slaughtered, right? The old adage, the old saying. I think I know all the adages from the old day. I think I wrote them all out one time for Benzinga. Yeah. I will say this much today. The retail sector is not good, right? Lululemon today down 13% here. Women's clothing, are you kidding me? Women always like to shop. It'll be too.
They did announce they're getting into men's shoes. I do have
getting into men's shoes.
Like here for
things are changing, right? It's not just one-sided anymore, and you've got to be all things for everybody. That's what Quasar Markets does. We have the platform, we've got education, we've got great TV like TT Trade the Pool. If you're not out there, Trade the Pool, excellent. Look, these kind of things are what needs to happen, right? So when you're looking at it from the perspective, right now the VIX is at 1941. It's in no man's land, as I call it, right? There's nothing here that I'm really look. I think you could pick Lululemon up here. We don't tell anybody what to buy or sell, but I'll tell you, I kind of like Lululemon here, and I don't think they're going to stop. You think they're going to stop selling clothes? No, they're saying we want to sell more clothes and different types of clothes.
No, and I would point out that again, if we talk about what I mentioned, which is, you start to look for spots, you put a wish list in, Lululemon sort of towards that spot, right? This is the area you can see, if I bring it back even further, that has been a pretty good historical buying spot.
Right.
Down at this 300 level where it's at right now. So these are the things you start to look for value. I will say I do have notes on Lululemon. The fourth quarter, they reported earnings of $6.14, surpassing expectations of $5.85. So again, like Steve talked about,
$6.14. Okay, I think a lot of people look at the earnings per share EPS, right, and go, oh, do they beat or they miss? Do they beat or they miss? This is how much money they made per each share of their company.
right.
$6. Oh my goodness. If every company could do that, oh my goodness gracious, we would have a different world, right? And yet we set the price of stock of Lululemon. If you pull up the PE ratio right now, you're probably telling me, I can't see it, but
I'll pull it up here right here, Steve. Give me 1 second.
Yeah, you're probably saying, look,
24.
24 on a
probably
high,
up around 40 or 50 back when it was towards its heights when everybody wanted to buy it.
If you liked it then, you're gonna love it now, right? So
yeah, and here's the other part, Steve. Like we said, people are mad because they gave a subdued outlook. You know what that is? Or revenue growth of 5 to 7%. That's not too shabby. Again, that's better than the GDP.
Government grew at
7%. That's better. The GDP of the EU is supposed to be 0.1%, I believe.
Yeah,
that's not too shabby.
The charts aren't telling you that. The charts aren't saying, ooh, this is the way you should buy. This is fundamental data. If you take fundamental data, you take a thesis and you attach it now to the charts. Now I agree with you on charts. Charts is only 1/3 of the equation, or even less if you ask me. But I think people, as I've been saying, pearl clutcher charts a little too much, right?
NVIDIA getting a nice push up here to the upside, back plus 112 here, up 78 basis points. So NVIDIA starting to buoy. It could get the market moving, jumped right through VWAP.
NVIDIA is pushing up. Yeah.
Nice move up here by NVIDIA. Tick has moved slightly positive. Advanced decline negative 1,300 so far.
So I guess
all four of the major indices are down so far. Bitcoin did regain 85.5 for a second, now just slightly below that. Gold keeps going to new all-time highs, 37.2. Steve called for 3,100 as a good spot that it would make it all the way up there.
Yeah, Mitch saying the same thing. Look, your charts is just one variable in a complex equation.
Absolutely.
Mitch says he is short AU and the VXX, cashing in the VXX already. I agree with that. As we get closer to the end of the day, I think you're going to see a sell-off in the VIX as people taking their profits there. But I
will point out we had you buying the VIX at $17 on Wednesday, guys, and we talked about April calls, right? If you did those calls, you are very, very happy about what has happened so far.
It was pretty obvious what was happening there. When the VIX gets under 17 or around 17 and gets above 25,
new volatility was coming. You just knew volatility was incoming. There was no doubt about it. Whether it was upward or downward, you were going to see the volatility, and it came back in. JP Morgan financials. JP Morgan holding up pretty well today. Wells Fargo, Morgan Stanley, all in the green nicely here. IBM, Citigroup also nicely in the green. Couple of laggards, again, Mitsubishi, so Japanese. And I will mention, before we started, we usually talk about the Nikkei. Nikkei's at its 2-week lows, by the way, overnight. So Japan definitely is still seeing headwinds here. NVIDIA, the only one of the Mag 7s to get to the north side so far into the green. Tick is pretty neutral. Advanced decline hasn't moved much since the open. Q still sitting right about that 480 mark I talked about. SPY at 566.22 right now.
85
is the highs of the day here. So SPY is bounced right off of that support at that 564.20 I was looking at here.
Yeah, and that's when charting should be used, right? That's exactly when charts should be used. So I do like that, yeah.
Great call there, Money Mitch, talking about how AU is a way to use the momentum of gold. We also talked here about Peter Thomas, talked about using the gold miners as about a 3-to-1 move to the upside lately versus the actual price of gold. So again, a couple of different ways you can play it. This would be one of them right here. AU, which is Anglo Gold Ashanti. And you can see the move there to the upside, explosive move to.
I would also say RGLD, Royal Gold as well.
I know you like Royal Gold, is always the one you recommend, Steve, there. Absolutely. Is another good play, although it is down up a little bit today.
And if you want to go miners, NEM is another one. Newmont Mining for me is one that I do like too as well. Newmont is the NEM.
Oh, NEM, right? NEM
is the big one there, I think, for me. So yeah, it's called Newmont.
And again, you've heard it from a lot of the experts here. The gold miners are a nice way to get about a 3%, a 3 times move. And again, we looked at this cup and handle the other day, by the way. I forgot about that. Yeah, that had a hell of a cup and handle formation there. So right now, Q struggling at that 480 spot. I do think that's the important line in the sand right now to get above and hold above here. We're going to see that melt to the upside. But gold definitely a move here. We do have Mr. Flanagan coming in at 10 o'clock to talk to all things currency. DXY has come down a little bit. Same to you, Money Mitch. I know you're on the air also here, so we appreciate you jumping in and talking with us. DXY back down to 104.21 here, came back below. Did briefly break above that top line resistance that we were looking at the last couple of days. So we'll see if we get any more moves there. Whoa, that's quite a storm brewing behind me here. Amazon down about 1.24%. I haven't looked at the Spider Selects. Let's take a quick look here. Spider Select, we see energy and utilities in the green, along with healthcare and real estate. So again, defensive stocks, defensive positioning stocks.
Tick down 500 here.
So I am feeling pretty good about my estimates of where we're going to come in. Crypto's still struggling, Steve. Not really any reason to it. You asked me at this early this morning. I just think it's more of that risk off right now. I think, this is when I start to, again, want to look for things that maybe get interesting as we get, closer to the second. Maybe this weekend, starting to look at something like a Solana that's down, that's been beaten up a little bit. It was at 145 or so. 131.18. That starts to get interesting for me here. Solana, again, I might put in a little wish list thing here. It comes down this 125 area. I really like it at. So again, that might be a move here I look at. I'm hoping Steve, keep your eye on it in case we freeze up a little bit, because I have a huge storm that's hitting above me here.
All right. And one thing, I'm gonna share my screen.
Absolutely.
We have at Quasar Markets an AI-powered newsletter here, and I suggest everybody sign up. We can do it right from the website, quasarmarkets.com. It is AI-powered. It is stronger than most newsletters out there that try to sell you something. We're giving you something here for free right now. You can see the top movers for today. We already know that by volume. There's news where Denmark's prime minister. This is not normal news that you would normally get, right? Google has reaffirmed its commitment to Android open source project. Talking about Ramadan. These are things that are coming from Google Trends. It's coming from high level AI stuff. There's sports in here. We're going to be adding weather to it. We're going to be adding lots of news. And if you miss any of the shows, like there's the big one we had with Michael Litt. There's a lot in this newsletter. I highly suggest everybody sign up for the newsletter.
That comes at 9 o'clock before the markets open, gives you all the information you need. Steve, let me take over the screen for a second, because I do have Quasar, my widget, up here. I do want to show this because I do want to show the ways here that we use Quasar Markets here. I don't have the TV up right now, but you can have Bloomberg television up. You can have any of these things up right on your screen at the same time. You can take a look and see what's going on Stock Twitch. You can see the names that are moving. They're talking about the SPY. They're talking about the DIA, which is the Dow Jones, IWM. So a lot of talk about ETFs we're seeing right there. I got my Twitter news comes right in here. I got the news from Bloomberg's, Reuters, Wall Street Journal. It's all hitting right here. Quasar's institutional news, Steve put together where this stuff comes out of himself. Look at that. I've got Lulu's. we already have an estimate. Analysts are hit at 925. You got the news. Lululemon price target lowered to 366. All of this on one screen. I don't have to load up 7 screens like I used to. All of this right in front of me. You can see Robinhood got a downgrade here from $70 to 62. All of your sort of analyst calls, all those type of things right at the thing. You like Google Trends? I love Google Trends. I want to know what's going on here in the US. I want to know what's going on, what people are talking about with Tesla. So I just type this in and boom, look at that. In a matter of seconds, I can see all the news coming out. I can follow all the Google Trends. I can go get redirected right there. All this comes directly out of the Quasar markets. There's my news if I want to have it broken down bigger, technical analysis, all this at your fingertips here on Quasar markets. Yep. Again, make sure you're signing up. I got all the top stories from TradingView, from Saturn. Again, I used to have to go to all these different sites to get this. It's in front of me. And then I want to point out how easy it is to go from that. And now I want to go right to my data, right? I want to take a look at what are the market movers, what's up the most today. PRTG, LXRX, DBVT. It's right here for me. These are the biggest gainers. Biggest decliners I can pull up. MIST, XTIA, Wolf. Trade halts. What's been traded the most recently? GATEU, BAYU. All these are the latest trading halts. I can come down. I want to do research. I was doing research on MicroStrategy, as everybody knows, one of my favorites. I have right here the order flow right in front of me. Steve put this together for us. I've got all my news on GameStop right here on MSTR, excuse me, right here in front of me. I come down a little further. I've got my stock screener that Steve's put together. I have all this information right in front of me. I've got the option chain. If I want to quickly go and pull up MSTR's option chain, all I do is type it in. And boom, I've got MicroStrategy's option chain right here in front of me. I want market fundamentals on MicroStrategy. Again, all I do is change it. It's set to Apple right now, but here's everything I need to know. All of it can be clickable, so you go right to it. I mean, again, I spent years doing this with Prosper Trading and other companies, and I used to load up 7, 8 screens. Here I have everything right in front of me. I'm able to quickly go. This one I love. This is the one I've shown you guys here on air before. It gives me all of my heat maps right in front of me. I know what's going on across forex, across stocks. You can see, unfortunately, most of us in the red. Microsoft's down 67 basis points. Google down 92 basis points. I can talk to you guys without moving from one screen. Again, I got all my trade halts here in front of me, my Twitter news, my U.S. market movers, my stock twits. I can pull it all up here off of one screen. Again, get on to quasarmarkets.com and sign up. This is free to get started with. You get a lot of this interoperability is free, and we do, of course, have a premium upgrade that you're going to want to do. Again, look at this. I got my ticker right across the top here. I don't need anything else but this on my screen. I do need my charts, and and TradingView is built into here and is part of the charts. I just didn't. I use the downloaded app that I like from them personally. But again, if I want to go directly into my TradingView charts from Quasar Markets, all I do is hit that button, come here, hit Super Charts, and boom, I'm in Microsoft's chart, ready to go, ready to do all the charting Steve talked about earlier here. All those indicators he talked about that he has access to. Everything is right here in front of you. Again, all of that directly from clicking on one screen, not needing 20 screens. And wait till you try it on your mobile, because again, it gives you all this on your mobile. Whew, that was a lot to say, Steve. You've built too much into this.
I mean, that's what I built it for, right? I mean, we built it.
But all that is already built into Quasar Markets, and there is so much coming out to see the educational platform that we have. You'll be able to get all of the stuff that the Blue Collar Investor and Dr. Alan Ellman and Prosper Trading Academy and Scott Bauer and Charlie Moon and Michael Shore, Jeremy Vreeland from Bullish Bears is part of that, Tyler Wood and the folks at CMT. Wait till you see all of it's going to be right there for you. If you're going to want to know about an iron condor, you'll be able to go on our educational platform, type in iron condor, and there will be videos and courses in place and ready to go for you to just pick and go. Free ones and courses you pay for. So, Mr. Flanagan, we appreciate that, of course, sir, from an expert like yourself with 40 years experience in Forex trading. If you're using the platform, that means a ton to us here. Steve, your eye catching anything? I haven't looked at the pumpers here so far to see what's going on outside of through the quasar there. Let's see.
What's catching my eye, and we've been talking about it for a while, is the feeling out there in the world, right? What are people talking about? Tariffs, obviously. What are they thinking about? And in about 10 minutes, we're going to hear the Michigan consumer sentiment numbers, and I think that's going to give me a much clearer picture. I know that it is a college educated guess. Okay,
don't get Mr. Flanagan all fired up, but I do think every bit of data right now matters to the retail trader. It might not matter to the institutional trader, but I think every data point does matter to the retail trader right now.
Right, and I want to see these numbers coming in, and we are expecting. Expectations, a reading of 64 and a final reading here. A prior reading there was so it's University of Michigan sentiment final reading, right? So it's going to be for the month, and prior reading was 64.7, and they're expecting 57.9. We get below 50, and that's not a good feeling. It's getting really bad. So
I'm seeing Bangladesh saying that President Xi would consider lowering interest on Chinese loans to Bangladesh.
Lucky Chart says they're not catching the falling knives today. I totally agree with you.
Yeah, I'm with you, man. Lucky Chart and I'm with you, buddy.
Talk to us about why you think today's the falling knives happening today. And I think that's the question, right? Is that there is. I think
people are so spooked. So I think anyone that gets in and doesn't see that immediate move to the upside is going to capitulate, and that causes a cascade transaction to the downside.
Right.
I don't think it's huge. Like I said, I didn't give you a big downside, did I? I was a couple of.
This is what I love about it, Howard, is that we're creating a thesis around trading and coming up with a better idea than just, oh, I'm so short or I'm so long. And I love what Mitch and Lucky and Steve are saying. There's a more methodical process to
right.
this.
And that's a great point. Sometimes we say these things and we don't explain to the viewers what it is. I'm just not bearish just to be on the opposite side of Steve. In fact, I'm usually a pretty bullish guy in general. I am looking at it, and I think that right now people are spooked. I think people that go longer and buying the dip, perma bulls, are scared out of their pants. And I think that what they do is capitulate. I see it from the folks in our Slack channels and across media, social media, and friends. And I just feel that's,
I agree with Lucky Chart here. He says waiting for Monday for stability to buy plus April 2nd tariff news.
And again, I want my money ready to go. I think that's a big part of it. I think I tried to point that out in a different way by talking about the fact that Buffett hasn't made that big buy yet. I think a lot of us are ready to buy that value play. We're in that. We're at a tradable bottom, but we're not maybe there in the news cycle yet.
When I talk about having a thesis, this is exactly what I mean by it. It's not just willy-nilly, my charts tell me this. It's not that, oh, I've got to do this because I saw this news. It's putting it all together and telling me, if you can't tell me why you're buying something or shorting something, then you probably shouldn't be doing it. Right?
Absolutely.
You need to explain to me as a 5-year-old why you're doing something and how you're doing it. Because if you can't explain to yourself, you sure as hell can't explain to anybody else, right? So you need to be able to say, okay, and when you buy something or short something, you should also be able to say, you know what? I know where my exit is. I know what my strategy is in buying. I get things are fast and we got to move fast, and your mind should be able to move fast. Your machine. That's why we have a fast machine, right? That's why I built a machine faster than anybody else out there. Is that very reason that you need to be able to explain in and out. Yeah. You need to be able to say, okay, I'm not catching the falling knife, but absolutely right. I'm going to do it on April 2nd. I'm going to wait for Monday. So not making a move is a move. That's a trade because you're protecting yourself and you're saying, I want to wait for April 2nd tariff news. I 100% agree with that because you're saying to yourself, I understand the market. And none of that was based on a freaking chart.
Right. No, you're 1,000% right. It's understanding and playing the market in front of you. And what I'm hearing from more and more of the experts out there is I'm not trading right now. I'm sitting a little bit. I'm okay being out of this volatility because all it is chop, and I can get just washed out for no reason.
But think about the very moment if everybody's sitting on the sidelines when they decide to get
The
back
amount of
in.
money to go to the north.
I don't want
Absolutely.
to
I
be
think
on the sidelines. I don't want to be chasing the FOMO when it finally comes back. I got into, as everybody knows, a week and a half ago because I called the bottom. I still think the bottom is in. I don't think that we're going to break through that bottom. I think everything is fine. And if everything goes well on April 2nd and tariff news comes out and Trump goes, I was just saying that, man, this market's going to explode, and all you're going to be doing is chasing, right? And I agree with Lucky Charts. He's saying, well, I want to wait. I'm okay with that. But if that's the case, then have orders in so you know where to buy, where you want to own something, right? I think that's great. I think it's absolutely. And Money Mitch is telling you, Mitch, if you don't know, Mitch Hawk is a friend of mine. We worked at Benzinga together. Look, smart people bring around smart people and help smart people become smarter people. Right. And I think that's what Quasar has been all about. Right. Is bringing in the professionals, bringing in people to help. Look, we don't always have the answers. And trust me, I know I've been trading for 34 years. I mean, Howard and I are talking about crypto and stocks and especially the stock market for 30 plus years, right? And look, we're putting something together here at Quasar to be able to bring all of that together, and we appreciate all of the love that we've been getting so far. I mean, this has been incredible. We've just now started the process of bringing this out to the public, and look at what we've done, and I think it's exciting, So look, I'm telling you right now, I want to bring all of this together in a way that we all prosper from this, and I love this. So this has been a really good thing. VIX jumping a little bit here, 1949. Advanced decline minus 3,000. If anything turns around, any good news hits in the markets here, we're gonna go up. I think it's gonna take off. But I like the trade of I'm not buying the falling knife. So I like that. That's a smart move.
Healthcare seems to be the main sector that's holding up. Not much going on there when it comes to anything else. Again, that's what's so great about being able to look at these heat maps. I can say, okay, what is anything moving? Utilities seems to have a little bit of movement. What's going on in there? Take a quick look. See, Constellation Energy is one of the movers. And then I can go right into my charts and take a look at what's going on with CEG, up 1.45% today. So again, you can get your trade ideas so easy when you have a dashboard like this. Again, EU plans concessions for Trump's after reciprocal tariffs hit. Okay. So that could be some of the positive news you're looking for, Steve, right?
Charts didn't do anything for that one, did it? I mean, that's what I'm saying. Like, we need when we built Quasar in a way that puts it all together in front of you, every bit of it, right? So that you have better news, and we put AI on top of all of it. So there's a whole AI section too. We'll show that to you as well. But man, this is what I wanted to do. I wanted to show people that it's not just about charts. It's about having access to everything, every data point out there, from everything from Google Trends to stock twits, what people are thinking, to actual news, to putting this.
If you want to know what's coming up for your economic data, here's everything coming up here, not just in the U.S. but around the globe. 328 this morning. We had GDP come out of Canada, month over month, came in at 0.40. Estimate was at 0.40. You have all of this data right here that gives you all of what's going on. As Steve said, the AI will show you that, and down the road here. But there's just so much to use. Your news,
you can show it now if you want to show the AI side. I like it.
Okay.
Tick down 435 right now. What we wanted to do is take artificial intelligence and actually make it work for us in a way that it didn't hallucinate. We wanted to do this in a way that the machine gave you an answer from the actual databases. So you'll notice on the right-hand side of the AI that's what other people are asking right now. The left side is what Howard has been asking. And we also wanted to make it a lot more interesting to you because we want to give you what is the most asked questions lately. You'll see the top 4 questions are actually right there in what it says most asked questions. And then you can actually see and you see how fast that answered the question for you, right? We didn't want to just put AI on top of it. This thing has about 17 AIs into the system. We wanted to go a little bit different. We wanted to actually attach the database. So the top left-hand corner, you'll see that this is a question that was actually asked of Fred, right? But if you hit the drop-down menu on there, you'll see all of the databases that we've added. And some of these even have multiple databases like NASDAQ, fundamental questions. You can ask questions about options. Some companies just have options AI. We want to create a whole thing around every bit of it.
Steve, I want you to explain to people about how this stops hallucinations and why you did this, because this isn't what you see across most other platforms. And it's the game changer for us. This is our secret sauce. Let's face it.
So what we wanted to do is, if you wanted to talk to a certain database through the AI, we allow that to happen. So what you do is you can click on a certain database that you're interested in depending on the data question that you're actually asking, right? And if you'll notice this,
so like the SEC is Edgar.
Yes. So if you wanted to ask a question about 10Ks or 10Qs, you'll notice that this person asked the question. I can't read it, but up there about a certain company, right? And we also want to tell you where the data came from, right? We also wanted to tell you timestamp. We want to make sure that everybody understood. So that there you go. Thank you. And you can see the bottom right hand corner, the Friday, March 28th at 9:59, it's 10 o'clock. So the new numbers are coming out now for Michigan consumer sentiment. Michigan consumer sentiment now coming in. So it looks like 57 point. Oh wow. So the actual number hasn't come in yet. Waiting on that now. Boom. Oof. And we want to make sure that you could actually see all of this data. So we also created, if you didn't want and you want to ask a more generic question, you'll see QMAI right next to where the drop down button is for Edgar. You can click on that button, and then you can ask actual questions. So if you go in and ask your question, I don't know, ask the question, tell me about Lululemon today, right? And it'll give you more general broad. And then when you get a question, you get an answer, then maybe we can send you down the rabbit hole so that you get a better answer to a better question. What I wanted to do for the world to be able to get is that you may not actually know what to ask. We did not want to use ChatGPT and write me a poem. I wanted to get actual answers from actual companies about actual databases and give you answers to questions you didn't even know to ask. Right? I think you should have said Lululemon.
Yeah, Lululemon.
But
this is Lulu, but that's
that's how fast it is. Actually, it's great. But what I wanted to do is that I wanted to create a place where you could actually create your thesis a whole lot faster. So now we're going to ask about Lululemon, right? And you'll notice that when the question about Lulu was up there, we didn't just give you the answer. We wanted to give you answers to questions you didn't even know to ask. And so that's what we wanted to do. And we built all of this. We built it with generative AI and predictive AI too as well. So this is a pretty power-packed machine. This is not a normal AI. This is an institutional version of it. And there you go. It helps probably write the question out. But
if I actually type and spell things correctly.
And it also has large language modeling in too. So if you want to speak to it, you can click the button and you can actually talk to it as well. And vice versa. It will actually answer the questions as well. But it's 10 o'clock now. Consumer sentiment numbers coming in at 57, just a little bit below the 57.
And again, this is giving you all the information about their earnings report that came out just this morning.
And then you go, the outlook and guidance. You didn't see that in ChatGPT, right? So we wanted to make sure that this was a much better, much stronger answers. We're using all kinds of AIs, and we didn't want to just draw a little chart, right? We wanted to create a whole thing around AI and build it. But again, it's not about having just charts and AI. It's about having charts and AI and data and news, and all of it in one place for you.
And then the amazing part is, so now you got your answer, but now you want to know more. I can come right here and look, oh, here's Lululemon's earnings report directly from them. Here is a report on it from TipRanks. Here's what Seeking Alpha said about it. Here's what Investopedia said about it. I can go directly to those links. And here is the corporate report for Lululemon.
Yeah. Crazy. And at the bottom of that AI as well, you can also see that here's the suggested follow-up questions. So you asked a good question, but
we always want to know about brick and mortar. How does it
I want to know better. I want to know more questions. And what are the most asked questions about Lululemon? And we want to give that to you too as well. So we want to go a whole lot. You know what? Let's do it right now. Steve Flanagan is in. I think we should bring him in because he is patiently waiting to hear, and I'm going to bring him in right now. Steve Flanagan, who I've known quite a long time. Steve, tell me, what kind of machine have I built here and we built here at Quasar Markets?
Steve, I'm sitting listening to you, and I'm thinking of being, over my 43-year career, sitting at a trading room, institutional, #1 in the world, sitting there. If we had, and of course, these are things that are being developed, but this is cutting edge of where the world is going to, where a retail investor suddenly has a platform in which to be pretty much on the same level of an institutional trading firm, where you can
tell me, Steve, what data did you have in front of you as you were trading yourself? What pieces of software did you have that you wish you had now then?
Okay, I'm retired 3 years, and we did not have anything close to what you have just demonstrated.
That's amazing.
3 years. That's
and
how
again,
long
this is
I
JP
retired.
Morgan Forex, right?
Yep.
They do a few dollars in that. That's not something that's just a side business for Jamie, right?
No, and so let me just clarify that. While I had expansive teams
Right.
at my disposal to get information, I did not, as a trader, be able to simply type it in and get that back in right in my wheelhouse. So that's the power that these tools are beginning to, Steve, what you're developing here, that's the power that this is bringing each and every trader now, especially at the retail level. We've all claimed in retail. Now suddenly I'm in the retail side of business.
Yeah, that's changed, hasn't it, buddy?
And I'm suddenly going, I need some information. I want this and I want that. And I want to ask this question. Having that ability really gives a tremendous amount of strength to my own personal, in the retail space now, my own decision making.
Yeah, it's interesting. For myself, from the State Department side or the White House side, or being on the inside of sports and be on the inside of Washington and New York and Wall Street. What if I could bring all of that inside data to the actual world and let people have a much clearer picture? It's interesting when I see campaigns go on and they think they know about the world but when they get into the White House, they're lost, right? Because it's like, oh, I didn't know about all of that. What if we could take all of that data that they get and put that in the hands of traders today? I think that's what our key mantra here is right now, is that I want to bring the world a little closer, tighten it up a bit, and let people in, and bring people like you who have had 40 years experience to teach people that it's not always about charts, it's not always about the news, it's not always about forex, it's not always about the software itself. It's about everything, right? Putting everything together.
Absolutely, Steve. And here's my point in trading that I would emphasize. Whether you are a good trader or not, it's all up to your intuitive, personal decision making. Not everybody has that ability to make a razor-sharp decision. But when you have the technicals, the news, and you can begin to ask the questions that you need to really get that intuitive side sharp, that's what your platform is presenting. It's not telling you buy this, sell that. No, it's giving you the tools to make that decision. Once you've got the tools, then it's up to you to follow that decision-making process. Did it work? Did it not? If it did work, wow, let me go back and repeat. That's the whole thing. Trading is intuitive, and it is in many senses repetitive.
Yeah. All right, let's get to it. I know the one thing that I love about Steve Flanagan, outside of your personality, is your knowledge about forex.
Yep.
I got a meeting to run to, and I'm gonna leave it up to Hondo here. But man, Steve, thank you so much for being part of Quasar Markets, and this is gonna be a great future here.
Have a great weekend, Steve.
Mr. Flanagan, how are you doing, my friend?
I listened to you guys today as a good warm-up. You really are cutting edge out there, what's going on today. But I heard the whole talk of technicals. I made a comment on there about technicals. Every ship at the bottom of the ocean's got that got a charting room. But what are the fundamentals? If I just go back into last week, we talked about this dollar looks like it's going to break out. But then I emphasized one of the problems that I was worried about was to go up and then go sideways. What does that mean? It means all the selling momentum as the dollar reverses and has gone up and goes sideways, the pressure is released.
Right.
What I use is stochastics. Stochastics are a good momentum indicator. And if I could share a quick screen, Howard.
Absolutely.
And what I want to point out is the dollar index. When I begin to look at that, in fact, almost every chart I looked at prior to coming on today shows the same thing. Here's where we talked about the dollar recovery, right in here. It was going sideways, and we did catch the move. We talked about a 104.05 break on the top side. We did put a high in around the 35 level, but we've since come back, not closing above 104.05. So look at stochastics beginning. This is what stochastics tells. This is one of my most powerful analytic tools that I use to make my decision. Am I a buyer of the dollar index here? I don't think so, because the momentum is beginning to ebb. So now I begin to look back down for my support points in here. And I do think that it's quite likely we're going to see another push back down into the low 103s before resuming. Patience is the virtue in trading that you must have. This is not the level
which we've been stressing all day, right? You don't have to trade. You know, that's a mistake that a lot of traders make, that burn out because they think they had a trade when the setup didn't hit what they should have been trading, and they quickly end up on the wrong side.
Right. Am I sharing my screen though? Can you see?
You are. You're good to go with everything here. I'm going to step away and let you take over here.
Okay. So if I jump into the euro dollar, same thing. It's oversold. I'm sorry. It's overbought now, and we're beginning to ebb and beginning to turn. So is this a level to be selling the euro? No, I closed my short very early this morning because I saw this and I said, look, I'm not going to fight this. If it wants to bounce here, and here we are at 108.18, I always use Friday closes. Friday closes are excellent tools to be utilizing. 2 weeks ago, 108.75. Last week, 108.12. You can see a Friday close to a Friday close lower. Where are we setting up right now? 108.17 right now. I'm going to be watching very carefully. I would expect us to close somewhere between 108.75, 108.12. What does that mean? It means next week, we haven't really got a decisive move. And that's what I expect. Now I expect stochastics to ebb back up, but I don't think that the euro dollar will bounce very high. If I looked at sterling, which was the one I highlighted on Wednesday, I really was watching this carefully. Well, lo and behold, their GDP came out at 0.1%, so the patient is barely alive in the fourth quarter. But retail sales surprised, 1% up. And so look at sterling bounce. Again, we talked about 128.60 was the break point. We put a low in around 128.65, but failed. And here today we are coming roaring back. 2 weeks ago, 129.35. Last week, 129.11, pointing down. And right now, 129.55. So there's a lot going on in the currency markets here that are beginning to show me that I am not looking to add into a dollar position. Longer term, medium term, I do think that the dollar during the month of April is going to show some resiliency. I think April is going to be more volatile than the month of March because we're uncertain. There's so many. Oh, now I'm taking a central banker's line, huh? Uncertainty. And that I don't like that term, because what does that mean? It means you're hiding behind making a stance here and saying what you believe. I believe the dollar index will bottom out in this next 4 to 5 trading days. before beginning to ebb up. I'm looking for a series of higher closes, provided we don't get below that 103, 102.80 level. When those levels break, then I go back to the drawing board and I'll look, again to make a new decision. I have to have a thesis, as Steve BigBeat's always saying. You got to have a thesis to trade. That's my thesis. I think that in April, coming into May, that I want to be looking for the dollar to make a resurgence. And that puts all the politicians and central bankers, their uncertainty. What's so uncertain in the world today? If you look around, inflation is kind of stuck, but it's not at the levels it was. They keep talking about 2%. I don't know where they came up with that fairy dust to come up with a 2% inflation level, but you're at 2.5, 2.7, 2.8. I got to say, that's in the ballpark. Now let's look at economic growth, which is ebbing. Although some of the U.S. figures have been still showing resiliency, but they are backwards looking. I'm looking forward, and I see a world where this uncertainty that everybody keeps echoing into these chambers is going to create a lot of people beginning to move back, as evidenced by your equity market. How do currencies begin to react to that? Currencies are telling me right now, sideways before another shake. And that's what I would, stress to you right now, is that I would be looking for a period of sideways trading with high volatility back and forth. My view, I'm looking to establish in the dollar. I'm looking to look for levels to buy. While I keep hearing about the European market as being very ripe for investing, I think one has to have an understanding that nothing in Europe happens quickly. So Germany is taking the foot off the gas brake and is looking to expand fiscal spending. Awesome. That takes the pressure off the ECB to cut rates, but that's not going to happen tomorrow. The UK got a budget in, but it was front loaded with tax increases and everything, and their economy is slowing. While they do have things in the budget that could be very beneficial in the bigger picture, they're not going to be in place for at least another year. So I got to look at the short term. Short-term trading is where you want to look at, develop your thesis, and then settle up for the longer-term trade. I think that the dollar index is going to base on this next move down. The base will be higher than its previous base, and that will confirm my thesis. Some of the things that we'll talk about, the yen. CPI came out today. The watched figure is called the Tokyo CPI, and it actually was 2.9%, up from its 2.8%, and that's a good thing in Japan for the raising rate cycle. Now, BOJ does not meet until May 1st. I do expect by May 1st to see the yen begin to favor a higher rate, another rate environment of 0.25%, bringing them from 0.5 to 0.75. In the U.S., we had the strong GDP underlining. The UK, I mentioned, German unemployment that just came out, 6.3%, up from 6.2%. So you can see my point. While Germany's got some good ideas, the economy is still showing signs of moving in a cratering condition. And then the US PCE, while everybody's saying it was up slightly, look, the headline figure came in at 0.3. Year to date was 2.5, which is unchanged. 2.5, we're looking 2%. I mean, come on, Fed. What are you waiting for? By the time you're going to see that number at 2%, I'd be probably saying I'm more worried now that it's going to go to 1.5. Overall, my thesis in that is that deflation is the bigger picture, as evidenced by over 25 years of the Japan fighting deflation and China suddenly moving into a deflationary environment. So if one thinks that deflation is gone from the face of the earth, that is wrong. It is still very prevalent in the overall market spaces. The only reason inflation jumped up was because of COVID in 2020 and all the supply chain problems, and that is all ebbing. So that's it, Howard, that I have to say. I'll bring you back in. And
absolutely, my friend, great information like always. I do think, it's going to be a little bit, it definitely looks like we're still moving to the downside here today. I think trepidation and malaise is in, the word of the day. And like I said, I think the big part is even the perma bulls, they're trying to buy these bottoms. They're trying to catch these falling knives. We're telling people, do not try to catch a falling knife because you don't want to lose that hand. And as you always tell everybody, Jack, be nimble, Jack, be quick. Don't get caught on that candlestick. I think those are some of the keys I have. Any last words from you?
I do have one last word, Howard, and just exactly onto your point there. What is really going on in the marketplaces today? You've got so many market participants, 2 decades, 20 years, addicted to money printing and dovish central banks. And everybody is thinking the moment you begin to see weakness, oh, here comes the central bank. They're going to cut rates again. And, everybody is so addicted to debt printing and liquidity injections and negative real interest rates. I just think that we're in a major transition period, and understand it. It is so incredibly positive to the medium to longer term trading environment. We're just in this period where this transition is beginning to take place. But so many people are addicted to the previous 20 years, and it's going to take a little bit of time. So hence, the market suddenly goes up and everybody's jumping back in. But bulls beware, because there is an equal side of the marketplace, the bears, that have some money muscles right now.
Right. It's so important to point out, yeah, exactly. That, that there's money on both sides. And as we said, it's now about trying to get off the teat of the government. I definitely recommend everyone take a look at the interview Steve did with Michael Litt, Global Strategic Advisor, one of the guys who called the Big Short back in 2008. He talked about, Secretaries Bessent and Lutnick and their discussions on what's called the 3 stool that they're going to use to prop up the government or to improve the government. Big part of the stool is cutting, obviously, what we're spending with Doge and these other ways. Number 2 was, the federal income tax of cutting it for people that make less than $150,000 in a substantial way. And then the deregulation of the markets, especially the banking markets and some of the things there, and that these levers need to be put in place because of the fact that quantitative easing has led us to a spot where we have to stop the flow of GDP being spent to, for our deficits every year.
Yeah, Michael Litt is just tops. I mean, this guy has such a great understanding of the economic fundamentals.
Yeah, this is the guy that's advising the sovereign funds in Saudi Arabia and Kuwait and, Abu Dhabi with what they're doing. So having him is such a pleasure. We have him every other week on here to talk about it. And like I said, and he's tied into these guys. He made it clear, when we were talking with him yesterday, it was interesting because he said, yeah, I went to school with these guys. I came up in the business with these guys. I worked at the hedge funds with them. I did these things with them. So he understands their thinking. He's able to give us, and so are you sometimes on some of these things, to give us these insights of what is actually being thought of by these, because it is different, right? Capitol Hill is now Wall Street of 10 years ago. Those folks that, were cutting their teeth over the last 20, 30 years on Wall Street are now the ones at U.S. Treasury and at Commerce and this thing. So it's a little bit different than what we're used to.
That's right. Yep. And these are very interesting market times to be trading in. And you're absolutely right. Jack, be nimble, because you've got to be able to react to each and every new data point. High volatility is still in the market. It may be subdued for this moment, but the next headline that comes out is going to, get us going. And what's the next headline? Monday, you've got Q1 end. So watch all the window dressing that goes on for the big boys. And then Tuesday, we've got reciprocal tariff day.
Is that going to be a new holiday we're going to have here? We should get our popcorn. I'm going to get my popcorn ready early on Tuesday.
Yeah,
for
there
sure.
we go. You bet, Howard.
Well, you have a great weekend, my friend. We'll see you on Monday morning, like always. Quasar Markets Live. Thank you so much, everybody, for joining us. I've got a lot of good things to put on today. We're going to have that Michael Litt interview. We're going to have some stuff from Prosper Trading Academy. We're going to have some stuff from Tuttle Capital and Bullish Bears. They had a gentleman in talking about stablecoin production and what the Trump company is doing, their Trump media. So we're going to have them on. So we got a lot of great stuff. We'll see you next time, everybody.